guys, welcome to this Moneycontrol live stream. I'm Nandita Khemka and I have with me Lata Venkatesh. Of course, if Lata is here and tomorrow is the RBI policy, we'll of course be discussing what to expect from the governor this time around. Lata, last time I remember when we were speaking ahead of the RBI policy outcome, we were talking about a 25 basis point rate hike. And what the governor did was, surprised us with a pause. And this time around, there's an expected pause. So, any chances of a surprise there? No. Or do you think it will be a pause?
No, I think they got it right last time, and the two subsequent inflation readings were way below market expectation, way below their own forecast. So really, they are having the last laugh. They were right about the previous pause, and there is no reason that they need to change that position now, because if anything, their inflation readings are coming below their forecast.
Right.
So no question of any more hikes. Pause is good,
right?
Until the next cut.
Right. So a prolonged pause is what we are factoring in. So some market participants are divided that maybe RBI could now roll out a rate cut maybe as early as October. Some are saying December, but there is another section of the market which believes that it will only be next year, maybe the first half or first quarter going forward. What are you picking up?
Well, I don't think the RBI is going to give us any timetable or indication that they are in cut mode. If you remember, the governor said that last time's pause is a pause, not a pivot.
Right.
A pivot means the first step towards a cut, and this is not a pivot. My sense is he will repeat it for a couple of reasons. One, there is still this El Nino fear, and you don't know. There can be some upside risk to inflation, at least a minor one.
Right.
If it's a severe drought, there'll be more other consequences, but that will be a consequence. Secondly, the Fed is also in hawkish mode. The last jobs data was very strong. So they have not yet said that they are done with rate hikes. They may pause in June, but they may.
July.
A lot of people expect, like Goldman Sachs expects a hike in July. So when there is that uncertainty and the weather uncertainty, why should they pivot now?
Right.
They are not going to tell us it's a cut. The market is free to vote.
Yeah.
I got one vote October, one vote December, and 3 votes saying
the majority is
unlikely in 23,
right.
more likely Feb 24.
Yeah.
So I don't think the governor is going to help us make up our minds.
Right. And what we'll be expecting in terms of stance is very important this time around, because a lot of people are expecting that the governor will say, okay, fine, let's change our stance from withdrawal of accommodation to neutral. But there's another factor that we've seen, the recall of 2,000 rupee notes. So there's ample liquidity in the system. So how will the RBI proceed when it comes to the stance? That's what the market participants are really waiting for this time around, rather than whether the governor hikes or not, because that's completely out of the picture now.
Yes, you're absolutely right that everybody will watch for the stance and for the liquidity statements.
Yeah.
See, if the stance goes now, if we have all decided that it is going to be a prolonged pause, there is no chance of hike, there is only a cut. Why don't you say neutral? Because the current stance, withdrawal of accommodation, means I am still withdrawing my easy monetary policy. That means I am hiking. If you're staying with that policy and yet the whole market knows it's only going to be a pause, that is not gelling with the state of mind that there are no more hikes in the picture. You have to say neutral. But RBI's position is withdrawal of accommodation refers to both liquidity and to whether there will be a hike or not. So hike or not is settled, no hike, but liquidity is still there.
Yeah.
So we are legit in keeping withdrawal of liquidity. Yeah, but I would say that if they retain the same language, the market will be a little puzzled. They will see it as hawkish, because you have to show some indication that I'm moving towards a non-hike or a non-accommodative stance. I'm moving towards a neutral stance. If they keep the same language, it will be a little of a disappointment.
Right.
Separate from it, everybody will want to know, what do you mean by liquidity? You said withdrawal of accommodation is my stance. And then by pulling out the 2,000 rupee notes into the deposits, you have actually increased liquidity, which is not withdrawal of accommodation. It is actually increasing accommodation. So, damn it, you're confusing us.
Yeah.
And on several days, the call rate, which should, if you are in a withdrawal of accommodation mode, the call rate should be where the repo rate is, 6.5%. It fell to below 6.
Yeah.
So the market is correctly confused. The Reserve Bank is doing what are called VRRs. Not very confusing. It is variable rate reverse repo. It means I'm saying I'm ready to take all your money for a certain price for 7 days. Banks did not offer much because they don't know whether they will need the liquidity. Suppose suddenly liquidity is sucked out because the Reserve Bank has supplied dollars. Whatever, some international problem, and so they have to sell dollars, and therefore they sucked out liquidity. So they don't know what to do. They don't want to apply in that 7-day lock up the money with RBI. So they want some clarity. They would be very happy if the Reserve Bank did a daily reverse repo. Daily, you take my excess money for whatever, 6.5 or 6.25, and return it back to me at the start of the next day. They would prefer that. But we have to see what Reserve Bank says about liquidity. The initial current confusion, and whether in the second half, do you see there will be a very tight liquidity situation because credit growth will grow, the government will borrow, government may announce some populist schemes for elections.
The run up to elections. Yeah.
At that time, will you be willing to buy bonds? Will you do an OMO? Will you cut CRR? They have all these questions. So there will be a lot of liquidity questions.
Okay, so it becomes important in the sense what governor says about liquidity. But let's also talk about inflation. As we all know, inflation has come down to an 18-month low of 4.7% in the last month, and even in the previous month it was below 5%. And for the month of May as well, it's expected to remain in that 4 to 4.5%, 4.5 to 5% range. So do you think there is a case for RBI to lower its projections for FY24 inflation to somewhere around 5% from 5.2% currently, or we will tinker with it right now?
Absolutely got the arithmetic right, because for April, May, June, their forecast was 5.2%. Now already, if you look at April, they have come at 4.7, and the expectations it's going to be 4.5 or something for May and even for June. So their average has to, even for the first quarter, come down from 5.2 to 4.6 or something. If they do that, the entire year's average comes down from 5.2 to 5.
Yeah.
Even assuming only in the first quarter it is undershooting. It could well undershoot in the second quarter also.
Yeah.
So there is a chance of even a sub 5%. Citibank has 4.9 as its full year average. So now we have to see. There is a good chance they will lower, but then the market will wonder how much lower.
Yeah.
The Reserve Bank may not want to go the whole hog because of this El Nino thing sitting on everyone's head.
They don't really want to jump the gun, as you would say. But even for growth, FY23 growth was above expectations, 7.2%. For FY24, of course, it's around 6.5%, right? Do you think it would be too early for the RBI to scale up the growth forecast?
No, it is not a complete outlier if they scale up. They scaled up last time also from 6.4 to 6.5.
Yeah.
It's not an outlier because your last quarter number was 100 basis points higher than the NSO forecast. NSO's forecast was 5.1. Their own forecast, RBI's, we had their Q4 forecast, I think, in December. It was 4.6.
Yeah, and it gave us 6.2.
6.1. So it was every reason that in their model, it should show an increase. As the base increases, GDP increases all over. No? So they can push it up, but they may want to hold their horse saying that we knew all this. That is why we were higher than the market. And now we have no need to change. They could take that position. But I'm sure they're going to sound pretty optimistic on growth.
I think they will be keeping in mind what's happening globally as well, given the fact that UK and US, of course, are staring at a slowdown, and that's obviously, also evident in the way our IT companies have reported numbers. Well, I think so. That's the word. We are expecting a pause, a prolonged pause from the RBI. We'll be watching out for what the RBI governor says with respect to the stance as well as liquidity. We, of course, will be getting you live coverage of the governor's address, and we'll also be getting you a post-policy analysis with a battery of guests. So don't forget to tune in to Moneycontrol at 10 a.m. tomorrow. With that, I think it's a goodbye from Lata and me. Thanks a lot for tuning in.